All right. Good afternoon, everyone. Good evening, depending, I guess, where in the world you are. If we can, let's just do a quick audio, video slide check. So if you can see me, you can hear me. You can see the slide that I've got up here. Just type a Y in the question box there. Just let us know everything's coming through loud and clear. Say okay. All right, looks good. Looks good. All right, perfect. All right, so we'll get started promptly at 4:30. So just another 5 minutes. And we'll be ready to go. All right, again, welcome everyone to this presentation hosted by us here at FFR Trading. My name is John Madison. I'm the Senior Strategist here at FFR Trading, and I'll be your host for this special presentation with Ian Cooper. Part one of Ian's webinar will cover how he trades news events. In part two, he's going to look at some recent trades from the service and also look for some new trade setups that you guys could take even tomorrow. All right, you should see the risk disclosure that we've got up here. Guys, will you agree trading is risky business, right? Especially if you don't know what you're doing. We suggest that you put your trading in the hands of a proven winner like Ian Cooper, right? We think that's a much better idea than trying to do this on your own. We are also in a highly regulated industry, so everything that I say and later everything Ian says has to be accurate. All right, so what we want to cover today, before I bring Ian on, I want to talk about a few key pieces of information with you. First, we'll take a look at who we are here at FFR Trading and what is our role. Second, I'll give you some background information on Ian. We'll look at some of the trade academics of his news event trader program, along with the performance of the program since inception and over the last couple of years, so you get a more recent picture of how the service is done. Then I'll bring Ian on, and he'll talk about how he trades news events, and then he'll get into, so again, some recent trade examples from the service, and also look for some current trades that you guys could possibly execute tomorrow. Finally, once Ian is done with his presentation, I'll come back and review the educational material and everything that comes with the news event trader program, and then you can hopefully make an informed decision if it's something that you feel will change your financial life. So first of all, who is FFR Trading and what is our role here? Well, we are a due diligence firm. Okay, well, what does that mean? Well, it means that we've been evaluating traders and their strategies for over 15 years to find real traders who make real money, right? So we sift through the thousands of strategies out there to bring you the best of the best, right? And how do we do that? Well, each trader and strategy has to go through our 8-step certification process before that trader is allowed to provide their services to our clients here at FFR Trading. All right, some of those steps include a thorough interview process. We get the rules for the strategy. The traders have to have at least 15 years of actual trading experience. We get a back test of the strategy and the trader's actual brokerage statements, right? If they can get through all that, right, and the majority cannot, but if you can get through all that, the final step is we run that strategy on a live account, make sure that the trades are executed properly and it performs as anticipated, right? So it's a pretty thorough process. I think you guys would agree. All right, let's talk about Ian and his background. So Ian has been trading stocks, options, ETFs for over 20 years. He's been helping traders learn to trade options and technical analysis and to trade the news by exploiting, the so-called herd mentality of retail traders. He spotted the financial crisis of 2008 early, along with the death of Lehman, Bear Stearns, as well as the collapse of the Dow to 6,500 and its subsequent recovery. Ian utilizes both technical and fundamental analysis to help traders and investors grow their wealth. All right, let's take a look at some of the academic guidelines of the program here. Now, I'm not going to spend too much time on this as Ian will be going into much greater detail how he trades news events, but some of the basics are, he's looking for excessively overbought or oversold news opportunities by buying either calls or puts, right? So Facebook would be a great example of a recent one. So Facebook came out with their earnings, the stock tanked. Well, Ian was actually buying calls, right? Going completely against the herd mentality, if you will. And they ended up having a nice winning trade on Facebook, going kind of against the prevailing market trend. So he aims for 3 new opportunities each week and recommends a minimum account size of $5,000 and a stop loss of at least minus 35% is used to protect the portfolio. All right, performance-wise. So this is the news event trading performance summary going back from January of 2018 here to December of 2021. So we've got 4 years of data here. This is based on a $10,000 account size, allocating $1,000 per trade. In that time, that 10,000 turns into $131,164 of net profit. That's a return on capital of over 1,300%. The average annual return here, right, 338%. Guys, think about what would that do for your IRA right now? Right, the market, I think the S&P is down about 10, probably a little more after today's trading, about 10%. I think NASDAQ's down about 15%. Dow's down about 10, 12%, something like that. You know, what would this do for your trading? If you look at the monthly average, so on a $10,000 account size, he's averaging about $2,800 a month in profit. Wins 78% of the trades. All right, a couple of important pieces of information. The average winner, $664. Average loss, $616. That's why he needs the high win rate, because the average win and average loss is about the same. So it's basically a high percentage winning system. So pretty fantastic numbers. I think you'll agree. Here is a more focused look at the service over the last couple of years. So this is from November of 2019 through December of 2021 here. Same $10,000, allocating $1,000 per trade here. That's a 544% on return over the last couple of years. Again, averaging about $2,100 per month in profit on a $10,000 account size. So you see the equity curve, right? We have big explosive move in the equity curve, and then a little flat period here, another big explosive move, right? Some drawdown here, new equity highs, drawdown, new equity highs, big explosive move there, right? Drawdown. So you see, any good trader and strategy is going to have drawdowns. They're going to have periods where, you know, they give back some profits. It's to be expected. All traders, all strategies go through that. The key is, if it's a good trader and a good strategy, they'll come out of that drawdown and go on to new equity highs. That's exactly what you want, and that's exactly what you see here. All right, so again, guys, think about what would this do to your trading account? You know, what would this do to your IRA, your retirement accounts? This is something that could absolutely change your financial life. All right, so those are the numbers. Let me get ready to switch over to Ian. And Ian, I'm going to go ahead and make you the presenter here in just a moment. So guys, it's my pleasure to introduce Mr. Ian Cooper. Ian, if you're ready, I'll get ready to switch over to you. And once Ian is done, I'll come back and go over everything that comes with Ian's News Event Trader program. Again, help you make an informed decision if this is something that you believe might change your financial life. All right, Ian, I'll go ahead and make you the presenter here. And I will shut my video off.
All right, thanks so much. I appreciate it. Want to do a quick mic check. Want to do a quick screen check. If you have a hard time hearing my voice or seeing the screen, please let me know, and we will jump on that immediately to take care of that for you. I won't keep you too long tonight. We simply want to discuss a few things, including how to trade the news, technical analysis, a little bit about building our strategy, and we're also going to dive into some trading opportunities that we're seeing in the markets as well that are exceptionally oversold at this point. We're also going to discuss why the markets fell today and why we believe that we may be a little bit overdue for a near-term bounce higher based on, you know, fear and greed and some technical pivot points that are standing out to us. Again, my name is Ian Cooper, and if you ever have any questions or comments for me at any time, I'm always available to speak with you or to hop on the Skype chat with you at any time. I am sometimes restricted as to what I can discuss as far as individual trades, but I'm more than happy to discuss the market with you and some what the stocks are doing these days. The first portion of the workshop today, we're going to briefly introduce you to news trading, including the anticipation of news, the dissemination of news, and the death of news, which we'll focus on mainly here. And the death of news also includes fear and greed-based strategy of billionaires, herd mentality, as well as technical analysis. The technical analysis piece is interesting because it can actually call tops and bottoms up to 80% of the time. Now, the system does not produce 100% winners. If anyone ever tells you they have a perfect strategy and winners all the time, just ignore it because it's not true. It's impossible. The second portion of the workshop, we're going to go over a recent trade that we made money on for Meta, symbol FB. We'll discuss exactly what happened, how we got in, how we got out. We'll talk about what happened with the markets this week and some opportunities that are emerging from that. And then we'll go into some, we can't do live trades because it's after market hours now, but we'll explain some trading opportunities that are popping up for us that you may be able to trade tomorrow, depending on if the market continues to lose its mind or not. So let's get started with the introduction to news trading. For years, many of us have been told that we could not trade the news, but that's just not true anymore. Perhaps that was true years ago when there were, a minimum amount of news sources out there. But these days, we literally have tens of thousands, if not millions, of sources of information. So we all get our information at different times of the day, and that's referred to as information friction. So we're always responding to news at different times of the day. And that means that news cannot be immediately priced into a stock, an ETF, or anything immediately. That dispels the efficient market theory, or EMT, which once taught us that when news is released, it's immediately priced into stocks. But again, that theory at the time did not account for the friction of news flow and the millions of sources of information out there. For example, if you have an intended reach of 100 people and 30 of them get the news in the morning and react to that news in the morning, while the rest of that audience, the remaining 70 people, haven't gotten that news yet, and they're going to respond to it during the day as well. And our goal is to pick up on news flow as early as possible so we can get in early and really earn the maximum return that we possibly can on a potential news event or a news event that's unfolding. We have the anticipation of news. For example, you stand at the top of a hill with a snowball. You roll that snowball down the hill. It's going to get bigger and bigger naturally. Begins to build momentum as well. Same exact thing is happening with stocks. If we can spot a potential story ahead of the herd, we can take a position and wait. We can then, get a jump start with our snowball. Then as more people begin to wake up to the opportunity, the snowball gets bigger and bigger and picks up more momentum with more people jumping on board. Typically you can do that with a biotech stock, for example. Let's say, 3 months from now, we know that the FDA is going to make a decision on a particular drug that's about to release either phase 3 data or is about to have an FDA decision or there's a PDUFA event. If we can jump in early enough ahead of the herd, we can start building our snowball and have it, begin to ramp up way ahead of the actual catalyst. Or you can look at a stock like Digital World Acquisition Corporation. I'm sure you've seen this stock, DWAC. You can see that in late November, as the story began to unfold of Donald Trump's app, Truth Social, which actually launched this past weekend, the excitement behind the story and the stock began to snowball. And as you can see, as it snowballed and as more people woke up to the opportunity, DWAC ran from about 40 to more than 83 a share. I believe just yesterday it was above 90 a share. Not sure what it was doing today. We were focused on other stocks that were kind of, melting down because the markets were, losing whatever's left of their minds. You can look at Pfizer also. Pfizer, that snowball has been gaining a significant amount of momentum, especially with the COVID scare and vaccinations and things such as that. And you can see that every time there was a new news that came out about the COVID, a new variant, for example, this stock would ramp higher each time on anticipation that they would be able to help meet demand for vaccines moving forward. Dissemination of news is a great one as well. I refer to this one as the stone in pond effect. You throw a stone in a pond and the waves kind of like, they move out and out and out and out and out until they die off. Same thing happens with a stock and its impacts from the news. We have our news impact, and then it's dissemination waves, and then news sometimes goes from local to regional to national, global in some cases, and then until that wave dies off, the impact on stocks can last a while and not be immediately priced in. And then until the news fades off and dies, we can trade its potential impact on a stock. GameStop, for example, late in 2020, you can see as news of GameStop was being disseminated on Reddit chat groups, and as more and more people woke up to the opportunity, you can see that between August and early 2021, GameStop was ramping higher, simply on dissemination of news from that Reddit group, and as more media outlets began to wake up and report that news as well. Or we can look at gold. Gold over the last several weeks ramped up from about 1780 to more than 1900, all because of this the situation between Russia and Ukraine and NATO, and no one quite sure what's happening. So what's been happening is investors have been pushing into the safe havens of gold. That's why gold has been pushing aggressively higher from 1780 to more than 1900. And you can see as the fear has been disseminated, gold has just quietly exploded higher. At some point though, we also have to realize that once the news flow, once the situation between Russia and Ukraine begins to die off, so will gold prices, which can lead us into death of news as well. So eventually, when the catalyst dies off, and the catalyst being Russia, Ukraine, gold is likely to pull back on the death of news. We can also see gold is becoming technically overbought at triple top resistance just above 1900. So it's really being squeezed higher here. We don't expect it to last much longer though. At some point something has to give, and there has to be some kind of clarity on the situation that's going to, pull back gold near term. You can see that with oil also. Oil prices have been ramping higher. Because number one, supply demand with oil right now, supply issues, our supply is extremely tight right now globally. Meanwhile, demand is picking up. Meanwhile, you have the Russia-Ukraine situation, and Russia is probably the number two, net exporter of oil at the moment. So you have all these crises combined, and it sends oil prices significantly higher from about 65 a barrel to more than 95 a barrel at one point. You can see that as the situation began to unfold and the news was being disseminated by thousands of news sources, oil just ticked higher. This is another situation where once the situation begins to die off between Russia and the Ukraine, oil should pull back as well. And we can touch on the eventual death of news as well. Now, years ago, the Ebola story was raging in the press, and it sent stocks like Arbutus Biopharma Corporation significantly higher, as you can see, between March and July of 2018. Now, eventually, when the Ebola story finally died off, you can see that once that news died, so did the ABUS stock, falling from about 13 to less than $1. Now, what we want to find mostly is death of news events, because it helps us make even more money along the way. So of anticipation and dissemination and death of news, we find most of our opportunities from the death of news.
Hey,
Okay,
Ian.
so yeah.
I just wanted to break in for a second. Would you mind on those charts, if you could use your, like a pen to point out exactly what you're referring to there? It'd just be a little clearer for the folks at home. All right, perfect.
So, yeah. So when the Ebola story started to, well, one of the breakouts of the Ebola story started around here and then exploded. And then Arbutus exploded on the story because they had a potential vaccine for it. Once the Ebola story began to die off, the stock took a header and ran from about 13 to about $1 a share. So this was a death of news event. Let's see. Let's move on to. Now, this is a great story. This was back in 2005, and this paints the perfect picture of herd mentality. You know, back in 2005, a bunch of sheep, dove to their deaths off of a cliff. A dozen sheep began to dive off, and then another dozen sheep decided to follow those, and dozens more began to follow those, and before you know it, there are shepherds just watching thousands of sheep just jump off of a cliff. Thankfully, some of these sheep did survive because they landed on, pillows. But it just illustrates how strong herd mentality can be. You're not really watching things yourself. You're just following everybody else, thinking that everyone else knows exactly what they're doing all the time. And that's a great way to lose money in this market. We see it happen all the time. We can combine herd mentality with excessive fear and greed of the billionaires. Warren Buffett told us to be fearful when others are greedy and greedy when others are fearful. Baron Rothschild became an investing legend, once telling us to buy when there's blood in the streets, even if the blood is your own. So he would buy at points of max pessimism, as did Sir John Templeton, who would wait for points of max pessimism as well. And he would buy extreme fear in the markets. For example, back in 1939, Europe was in shambles, only getting worse. So John Templeton went out and bought shares of every European stock trading below $1 a share. And he would make a fortune from that, simply by betting against the herd and betting on too much fear in the market. These are some of the technical indicators that we do watch when we're looking at death of news events, MACD or moving average convergence divergence, Williams percentage range, relative strength, money flow, Bollinger Bands, which are set at 2 standard deviations above and below the 20-day moving average. Now, I want to show you some before and after charts here. Now, just a few weeks ago, in late January, we had another webinar, and this was one of the charts that we discussed. This was the Dow Jones Industrial Average, and you can see at the tail end of the chart here. Oh, let me pull up the pen here. At the tail end of the chart here, have excessively oversold the Dow Jones had become. It pulled back massively on fears of the Federal Reserve, interest rate hikes, and a bunch of uncertainty as we began January. January was a disaster of a month for the for the Dow and for most of us. At the same time, you can also notice that the Dow at that time was below the lower Bollinger Band. Now your Bollinger Bands are here. The green lines, this is your upper band here. This is your lower band. So the green lines, your Bollinger Band, set at 2 standard deviations above and below the 20-day moving average. And you can see here, it became excessively oversold below the lower Bollinger Band. At the same time, RSI, or relative strength, was below its 30 line here. MACD pulled back to an historic low. Last time it was as low as around here and here and briefly over here. And then we have Williams percentage range, which is probably one of my favorite indicators because it actually moves higher and lower before a stock moves higher and lower. And you can see how extremely oversold that Williams percentage range came as well. So we had oversold RSI, with Dow Jones oversold under the lower Bollinger Band. We had MACD oversold, we had Williams oversold. They all aligned perfectly. And then you can see, and let's see, hopefully it'll let me do this. And if you have any questions or comments along the way, please, feel free to stop me and I'll get back to you. Let's see, pointer. Of course, it didn't erase what I needed. And then this was the after. Okay, remember RSI was oversold. Dow Jones oversold under the lower Bollinger Band. MACD oversold. Williams oversold. Remember, those were our technical pivot points. So about 2-3 weeks after we found the opportunity, the Dow Jones did pop as we were expecting it to from those extremely oversold moves. So we were able to catch excessive fear here. Actually, the tail end, we were able to, we actually bought put options around here and then cashed out right at the bottom, taking our wins, and then turned around and bought call options simply based on fear and greed and excessively oversold conditions on RSI, Bollinger Bands, MACD, and Williams percentage range. So that turned out to be a very profitable trade for us, really on both sides of the trade. The cursor doesn't want to. Oh, that's weird. Sorry about that. Sometimes my computer likes to lose its mind. All right, let's move on to the next example. Here was Apple. Apple kind of set up the same way. Apple became oversold right at the 30 line there. Apple fell way outside that lower Bollinger Band. It became oversold on MACD, excessively oversold on Williams percentage range. This is the before, kind of the same setup that we saw with the Dow Jones just a minute ago. And then here was the after. Remember, at the lower RSI at the 30 line, outside of the lower Bollinger Band. MACD pulled back too much too soon. Williams under its 80 line, those aligned perfectly. We had bought call options around this area here and watched to ramp up again. We were able to cash out with a respectable win on that as well. Lithium Americas. Lithium Americas is just one of a few lithium trades that we're in love with right now. Lithium is a great story to be involved with long term. As you know, the world is pushing for more electric vehicles on the roads. Global governments want millions and millions of electric vehicles on the roads, over the next decade or two. But for that to happen, we need a bigger supply of lithium. Unfortunately, we're undersupplied. There's far more demand than there is supply at the moment. which has been sending lithium prices sky high. In fact, over the last year, lithium prices, because of supply demand alone, were up 300%. That's part of the reason Lithium Americas ran from a low of about 12.5 to 42.5 between August and November, as you can see on the chart here. But this is another one that we've been trading kind of off and on, not only on dissemination of news, but also on the recent, pullbacks and death of news events and things such as that. We've again found opportunity here because of technically oversold conditions. As you can see here now, RSI did not touch that 30 line, but it pulled back to a historic low, as you can see, dating back to the lows dating back here. So it doesn't always have to hit or penetrate that 30 line to be considered severely oversold. Again, LAC, or Lithium Americas, fell below its lower Bollinger Band. MACD was on the floor. Williams was on the floor as well. This is the before picture here, and then we can jump in and see, this was our buy point here. RSI was just around here, right outside the Bollinger Band. Oversold MACD, oversold RSI, all of those aligned. Lithium Americas pops from about 22.5 to 30.5 not long after. Now you can pull up, any of your favorite charts and look at these very same indicators out there, and you can see these same opportunities pop up. And what's nice is that these indicators don't just call bottoms; they can also call tops as well. For example, using RSI, Bollinger Bands, MACD, Williams again, you can see what happens here. For example, when RSI gets to or above its 70 line, as you can see, that happened here or here, for example, and LAC gets to or above its upper Bollinger Band here and around here, for example, and MACD is overextended into overbought territory. You can see this just isn't sustainable. For MACD to push this high is just not sustainable. And then when you have your Williams percentage range above your 20 line, that's also telling us it's overbought. And when those all, tell us that they're in overbought territory, 8-9 times out of 10, you'll have a reversal in the stock, in the index, in the ETF, whatever you're trading. What's interesting is you can even apply these very same technical pivot points, billionaire strategy, fear and greed, everything, even to cryptocurrencies as well, with Bitcoin, Ethereum Classic, you name it. You can really apply these very same indicators to those as well, and try to call tops and bottoms there as well. You can also do it with gold prices and oil prices and lithium prices, you name it. Pull up any of your favorite charts, pull up a 1 to 2 year chart using these same indicators, and you can actually trade the same chart over and over and over again and just make money from it, the tops and bottoms again and again. This was the after chart. Okay, well, here's gold. Now, again, gold may be offering us a unique opportunity near term. Again, gold prices have been ramping higher because of uncertainty over, Russia, Ukraine. The situation over there is just deteriorating and just getting worse by the day, unfortunately. But as you can see, gold is becoming a bit overbought at the moment. So we are watching gold prices, and we may actually go short not only gold, but also, related gold stocks such as Barrick Gold, symbol GOLD, or Newmont Corporation, symbol NEM, or there's also Kirkland Gold, symbol KL. They're all overextended into overbought territory. We're watching them very closely, but we're not about to buy yet because we do not have confirmation. The one thing you want to watch with each and every trade that you place or are watching, especially with these indicators, is you want to wait for confirmation. You want to see that the stock or the index or the ETF or whatever are beginning to either pivot higher and the strength there, or is beginning to break down. Because if you begin to buy or short something, too soon, you can lose money. So we are watching for opportunity here, because gold, for example, is excessively overbought on RSI, MACD, Williams percentage range, and I don't have the Bollinger Bands up on this one, but I'll show you this again in another chart. Let's see. And I'm going to touch on, I want to touch on a couple more charts here, and then we'll stop real fast for questions, and then move on a bit further here. So here's Barrick Gold, for example. You can see Barrick Gold has become excessively overbought here on RSI, MACD, Williams percentage range. It's really ready to break down. Anytime gold is looking like it's going to start breaking down or breaks down, Barrick Gold will be a great setup for a near-term put option. You can see it with oil prices as well. You can see we were easily able to call the bottom of oil as well in December using the same indicators. RSI at 30 line, MACD pulled back too much too soon, Williams below the 80 line, and then it exploded higher. But now we're watching oil for a short opportunity, because now it's extremely overbought. Now you may be saying to yourself, well, anyone can catch these opportunities, after the fact, but that's not what we're doing. Not what we're doing is we're waiting. We have a list of 50 opportunities that we're always watching, and we're waiting for these exact pivot points to be known before we enter a trade. So as soon as these indicators pop up and let us know it's oversold or overbought, we're going to wait for confirmation before we get in. Chevron is also one that we're watching as a potential short opportunity. You can see this one is excessively overbought as well. We're waiting for oil prices to break down. If they break down with the Russia-Ukraine situation. So before we move into part two, we wanted to stop here and take any questions or comments that you may have.
All right, fantastic, Ian. Yeah, so we've got some questions coming in here. Leroy asks, what about silver?
Silver, I'll actually pull up a live chart of that. Well, not a live chart, but a chart of that in just a moment, and we can take a look.
All right, and then JP asks, what exactly is your confirmation?
We're waiting for 1 to 2 days of a change in direction. We want to see, we don't want to buy into we don't want to be faked out, because a lot of times people will think the bottom is in place. And then, as we saw in the markets today, a lot of people got faked out believing that initial upside today was the actual bottom. And that turned out to be a fake. So.
And somebody, I guess some people have some symbols that they're looking like copper, silver. So I don't know if you want to take a look at those. There's some other questions I'll ask you first, maybe before you go back to your charts, if you want to use your charts. Yeah. Some are asking, are you using more technicals or fundamentals to spot opportunities?
At the moment, we're using more technicals, but we always involve news and fundamentals into everything that we try to do. So we never want to leave out one component, if that makes sense.
Yep. And then someone asked, what charts are you using primarily? Do you recommend a specific charting platform?
I like, personally, I use E-Trade. But during the day, if I want a really good chart, like if you can see it on your screen right now, stock charts offer some really good charting software that I really love to use. I also like to use its screening software as well. I'm not pitching pitching stock charts at all. Just letting you know that I do use it. I also use bigcharts.com and other screeners that I can find. I'm always looking for a new platform or ways to screen for anything.
All right, great. And then looks like the final one here, I see history. The history of your trading service, was that track record executed in real time?
Yes.
All right, yeah, and then I guess, like I said, some was it copper and silver were the two specific questions they had. If you want to, I see your chart up there, so I'll let you answer.
Pull up a chart of silver here real fast. Yeah, silver. Yeah, so you'll notice here on stock charts, I pulled up the RSI, Bollinger Bands, MACD, Williams, and also full stochastics. I'm always looking. I'll always introduce even more indicators along the way, just for further confirmation. Further confirmation isn't going to hurt. It's another way to confirm what you're trying to find out. It's just another way to confirm what the other indicators are telling you. In this situation, you can see that silver prices are right now at challenging double top around 24.5. It's also at that upper Bollinger Band. It's also running up on fear of Russia, Ukraine. But here, I'd be cautious of silver prices here because, again, RSI is becoming a bit overextended. You can see historically that each time that RSI gets this high, silver begins to pull back. That happened in, if you can see my cursor here, right here in November, it topped out, happened over here in October, topped out, happened over here in May, and again in April. So that was a great indicator. But of course, you want to confirm. So the other thing that we confirm with are Bollinger Bands, which are the green bands that surround silver here, set at 2 standard deviations above and below the 20-day moving average. That's just what we're comfortable with. You can set it at 15-day, 13-day, 50-day, whatever works for you. We like to use the 20-day. Again, silver is testing double top resistance here, just above 24.5. Could pull back, and then we look at MACD. MACD is also technically overextended to the upside. At some point, this needs to correct. Williams percentage range above its 20 line. That is unsustainable. And then we have your full stochastics. You can also use slow and fast stochastics as well. We use the full stochastics here. And you can see this is a bit overextended and overbought territory here as well. So I would possibly start considering a potential short opportunity in silver stocks and related ETFs as well going forward. But again, you want to wait for confirmation before you jump into that potential opportunity, because everything right now, literally everything depends on what's going to happen next between Russia and the Ukraine and NATO and whatever else is going to take shape in that region. It's an absolute disaster at the moment, and no one's really sure what's coming next. So, and then copper's kind of flat right now. It's consolidating around 4.5. I'd really have to watch this one. I don't really have much of an opinion on this one. It's kind of, it looks like if you were to draw your trend lines from the lows of there, I mean, it looks like it's continuing to trend higher at this point. But that's another one I'll keep an eye on moving forward as a potential opportunity. Because copper is another great story, especially with your electric vehicle demand and the potential for an infrastructure plan in the U.S., which we desperately need at this point. Also wanted to touch base on let's see, I found about 6 opportunities for tonight that I wanted to go over with you real fast. Now I did have particular trades set up for each of these, which I'll discuss with you. But if markets are going to continue to fall, you may want to hold off just temporarily until the market bottoms out here. Now you can see here's the Dow. Now this morning the Dow started to push aggressively higher. I think at one point we were up as much as 150 points this morning, and then things started to just crumble and fall apart because of uncertainty between Russia and Ukraine. You know, I'm tired of saying that Russia, Ukraine over and over again, but that's the chief driving catalyst of just everything right now. The uncertainty is driving markets nuts. It's sending, you know, volatility through the roof. You know, no one is quite sure what's happening next. Hopefully it won't last long, but we do believe that the Dow Jones may be bottoming out some point soon, you know, technically at least, because you know the fear is a bit overdone. As you can see right now, the Dow is at double bottom support over since January began. It's also challenging support dating back to June of last year as well. So we're going to watch that point. If the Dow begins to break through June support, we could really, you know, we could see even more of a massive pullback potentially to this support line over here in late March. If you can see that cursor circling that point, and that would put us around 32,000. Hopefully that will not happen. Hopefully there'll be some certainty and there will be some, you know, calm in the region out there. And also, as you can see, RSI has done a really good job of pinpointing exactly where the Dow has eventually bottomed out. Each time there's been a massive pullback, you can see RSI dip to its 30 line or below, and that was the actual point at which the Dow began to bottom out. Hopefully, you know, that's going to happen again here soon. We're also below the Bollinger Band, MACD on the floor, Williams on the floor, full stochastics on the floor. Now we just have to wait for, you know, confirmation of potential trend change here, which we're hoping comes relatively soon. Well, I also wanted to show you before we get into these individual trades. And again, please stop me if you have any questions or comments, or if I'm moving too fast. I don't want to torture anyone here. Okay, so this is your volatility index, or the VIX. It's also known as your fear gauge. We'll go ahead and pull up a 2-year chart here. Now, what's incredible is that these very same technical pivot points that we use with other stocks in metals and indices and ETFs and things such as that, can also call tops and bottoms on the VIX. I've been tracking the VIX using these for years because I saw it happen. And I was like, there's no way this is that these indicators can actually predict exactly when fear or greed is going to begin to die off. But that's exactly what it's been doing for years now. You can see here that this is a 2-year chart. Now you can see that RSI, when it gets to or above that 70 line, telling us it's overbought. That it's telling us there's too much fear in the market. And then VIX at the upper Bollinger Band is telling us there's too much fear in the market. Williams percentage range above its 20 line, telling us there's too much fear in the market. Same thing with full stochastics. And then when all those indicators align in overbought or even oversold territory, we'll typically see a reversal. Now we're in a difficult situation at the moment, so it'll be interesting to see if the same trend holds up or not. But I just wanted to make you aware of the volatility index, the VIX, and you may want to keep this chart in mind and keep an eye on it and see what happens over the next week or two with everything going on again between Russia and Ukraine. As for opportunities, one of those is one of the opportunities looking at is Apple. We'll show you a 1-year chart there. This is currently a 2-year chart. Let's make it a bit clearer here. You can see here everything is currently oversold at the moment. You can see Apple is nearing its 30 line on RSI. It's nearing its lower Bollinger Band, oversold on MACD, oversold on Williams, oversold on full stochastics. The only thing holding this thing down right now is uncertainty in the market. Excuse me. But eventually, I think this could pivot very nicely higher. One way to trade this opportunity is with the in the money. You can do an Apple March 18, 2022 160 call, or you can even do a 165 call on this one out to March. But again, before you venture into the potential opportunity, you may want to wait for a confirmation of trend change. Because if we have another down day tomorrow, Apple could pull back again. We also have an opportunity in AMD. Now, AMD is one of the greatest tech stocks that I've traded over these last several years. I always like getting in and out of this trade. You can see right now this one's consolidating just under 110 a share. We'd like to see this one break higher, but again, this one's being held back on the situation overseas at the moment. But this is another one that we've been watching. A good way to trade this one would be with an AMD March 18, 2022 110 call, or even a 115 call. Again, I'd wait for confirmation of trend change before jumping in, because again, if markets decide to take a header again tomorrow, tech stocks could swim in red again tomorrow, and the last thing we want to do is lose money. There's also ALB. Now, ALB is a great lithium stock, just like Lithium Americas that we spoke about a moment ago. ALB is another great opportunity. Eventually, we would like to see this one refill its bearish gap around 238, 239 a share. You can see here too, it's excessively oversold on RSI, outside its lower band, on MACD, Williams, and full stochastics as well. So this one's overdue to bounce higher as well. For it to pull back as much as it did today is a bit overkill, especially when you consider how much demand there is for lithium supply on the market right now. With this one, options are a bit pricey on this one, so I would just potentially buy just the underlying stock here and just buy it, forget about it, and check back on it in a year when markets finally decide to recover from the current overseas situation. We also want to look at this one. This is an interesting setup, and you can see this one's been just destroyed recently after a nice uptrend. It fell from 37.5 to around 618 a share. This is Matterport, MTTR, and what's interesting about this trade here is that Matterport is deeply involved with the metaverse. With imagery and 3D and everything such as that. So this is one of the cheaper names that usually gets caught up and moves higher with any discussion of the multiverse, of the metaverse. I'm sorry. You can see here it's technically oversold here as well. But given time, I believe that MTTR could rally back and even may challenge its prior highs above 37, given the strength of the metaverse story, especially with other companies such as Roblox and Facebook and Microsoft venturing in to the metaverse, and with people spending literally millions, if not billions of dollars on metaverse investments and even on metaverse real estate. We already have people buying metaverse real estate. I was reading the other day where rapper Snoop Dogg paid about how much he spent? Maybe $500,000 on metaverse real estate. there's real estate in the virtual world. So the opportunity there could really pay off very nicely as well. And with that, I'm going to turn things back over. I greatly appreciate you taking part in the webinar today. I hope you learned a lot. If you have any questions, comments, let me know. I'm always happy to speak with you at any time if you have any questions or need further guidance. Thanks so much.
All right, great job, Ian. Yeah, love the setups and the actionable setups. If you would, Ian, could you just provide folks who are asking for your contact information, just your email? They just want to follow up with you on some of the information that you gave there.
Sure. I'm trying to figure out which one to give you. Yeah, I'll get it for you.
All right, guys, and I'm going to take back control here. All right, guys, you should be able to see my screen here. All right, so some questions, guys. Look, you're all here for a reason, right? Maybe, you're a new trader, you're struggling, you're not profitable, and you need help. So ask yourself, would this help? Would partnering with Ian Cooper help you reach your goals? Maybe you've got years of experience, but you've never achieved the kind of numbers that we're talking about here today. Would partnering with a professional like Ian help? Would it help to see how he's successfully been trading news events for many years? Would it help to see what indicators he uses to help pinpoint those exact entries and exits? Might that help you reach your goals faster? Or maybe you're trying to build that retirement, right? But you realize 10% in a mutual fund is not going to cut it, right? I was reading some statistics. If you're in your 50s, you've got about $30,000, the average American, saved for retirement. 10% in a mutual fund is not going to cut it. You've got to do something different. Would getting a return over 50% or 100% or more, would that help? Would you then be able to achieve those financial goals or that retirement goal? And for those of you, maybe you just don't have time to do this yourself. Maybe you work full time or you're busy, running your own business. Would it help to have Ian's trade signals sent directly to the broker who would execute the trades in your account for you? Would that help? So as you think about that, let's go over everything that comes with the news event trader service. All right, first of all, you get direct access to Ian for any educated questions that you have regarding the markets, regarding the methodology. All right, Ian's available, and we'll talk about that a little bit more in just a bit. The trade alerts directly sent to your email. So when Ian takes a trade, you get alerted via email or cell phone or both. The education on the methodology, describing the entry rules, the exit rules, the money management rules, right? All that in writing so you can learn the strategy. It's not just where we're just feeding you a bunch of signals. You can, if you wish, you can learn the strategy for yourself, right? You do have access to third-party registered brokers. Again, this is an option for those who don't have the time available to execute the trades themselves and they want the broker-assisted trading. And of course, you do get access to us here at FFR Trading and our team. Again, we're here because we vetted all these traders, right? So we've got, a number of traders trading 20 different strategies in all the different markets. What we'll do is we'll build a portfolio of non-correlated strategies for you, because as you know, strategies have good periods, there's periods they go into drawdown. So if you have a mix of strategies, you combine them, it smooths out your equity curve, which is what you want. All right, let's talk about the offer that we have today for you. Ian Cooper's service license, it's a unique opportunity for partnership members to trade and learn with Ian, right? It's what we call our learn and earn programs. Ian leases the service on a 1-year block, exclusive participation program for a select number of individuals. So these are limited. The reason they're limited is because we can only have so many people taking the same trade before it will potentially show up on the big bank's radar, right? And we don't want that because then they'll trade against it. All right. The first 10 individuals to call in and sign up will receive his 90-day workshop course. So once a week for an hour at a time, Ian is going to be doing an interactive live trading workshop. So if trades set up during the day, we'll be able to take those trades, educate you on what's going on in the markets. And as a bonus, anyone who subscribes to his service will receive access to his daily Skype group. Ian is in there every day. For trade collaboration, coaching. If you have questions, he may be throwing out some additional trades there as part of it all. All right, so what you need to do is book a call with us now in the next 15 minutes. Right? We need to talk to you because we have to see if this is a good fit for you. This is not for everybody, but we just need to speak with you, make sure this is a good fit. So I'll put up the numbers here. In the US, you can call the 800-883-0524 number. If you're outside the US, you want to use the 832-404-2420 number. All right, guys, if you have questions, go ahead and post them. I know this, right? If you don't do anything, nothing is going to change. Nothing in your financial world changes. You have the opportunity here to catapult yourself into the top 10% of traders in the world. So I'm saying, take that step. Change your financial life. Give yourself a shot. Okay. All right. So again, there's the numbers: 800-883-0524. Again, outside the US, the 832-404-2420. If you've got questions, go ahead and post them, and then we'll wrap up. Yes, this is being recorded, and if you give us a call, we will make that recording available to you. Let's see, some other questions coming in. So Ian, just another question, I guess, for you here. How do you choose which news events to trade?
Really just there's no real way to decipher that. You really kind of just research it, what's going to happen. I look for strong news events to trade on that are going to be sustainable. But most times I'm looking for the overreaction following a news event.
Okay, great. And can I get text alerts as well instead of email alerts? Yes, I'll answer that one. Yes, you can get either or both text alerts or email alerts as well. Right, someone says, as a member, do you help set up our charts? Is that something you can help them with, Ian?
Yeah, I always send over examples that they can look at as well with everything set up on them usually.
Okay, and let's see. Lance just asked a question about the broker-assisted trading. There's no additional fee for that. You just pay a commission through the broker when they execute trades, just as you would through any broker. Leroy asked about trading Forex.
No, we don't do any Forex trading.
I will say, yeah, so I will say, Leroy, just from my experience trading Forex, using some of these same indicators, it does work well. That's just my experience, though. Lance, give us a call, and we just have to make sure this is a good fit for you. Like I said, it might not be something that is a good fit for you, but we need to talk to you first before we can. All right, another question. How quick are your alerts going out to the members?
Usually with, after all the research is done, I like to get alerts out relatively quickly. I mean, there's no real time I would put on it, but relatively quickly we find the news event and a potential trading opportunity. I mean, if we're just trading in overreaction, it's a bit faster.
All right, perfect. All right, looks like we are just about out of time here. So anyone, guys, if you have additional questions, just give us a call there, the 800-883-0524, and we can finish, answering any questions that you have. Again, make sure this is something that's suitable for you. We appreciate you guys being here. Give us a call, and we can't help you out unless we can talk to you. It's not going to hurt you. It's not going to cost you anything just to talk. Okay. All right, guys. You guys have a great evening. Thank you again to Ian Cooper, and we'll see you guys in the next webinar.